Good afternoon, guys, and welcome to the afternoon show where we are looking at the US markets. Now, what I'm going to quickly do is just get on YouTube and see if I can find everybody. Now, today we are going to be talking about shares in the US show. I just want to kind of show you guys some bits of information about how to. Good evening, John. Just about how to dig a bit deeper in some of these, in shares and see if we can garner some information from some of these shares as well. Now, you got my chart here. Let's have a quick look through the markets before we do that. The overall picture of the market, which is a little bit weak today, and maybe a shade surprising, but by the same token, I think that there's potentially some profit taken now. All the things have been passed through. Quick check on the news that's driving the market today. Have a look through all these different bits and pieces. China CPI year on year, a big drop actually. Let's just double check that and see if it's an extra. Yeah, look at that. I mean the price is a huge reduction. Now I do want to discuss gold. But I want to make sure that everybody that's trading gold doesn't get influenced by what I'm going to say. I don't want to influence anybody in the way that they are trading gold in the direction that they're going with gold. But I do want to discuss gold because I would like to have put gold in my portfolio, but I've got a bit of a problem with it at these current price levels. So I'm going to talk about why in a moment. But anyway, let's have a look now. CPI. The reason that I thought of it straight away is that CPI is a gauge of inflation, and it's the consumer price index. So you can see that the cost of goods for the consumer is falling in China, which you might think would be a good thing, but actually it's not a good thing. We do need a kind of healthy inflation level, and we don't appear to be getting a healthy inflation level. Certainly out of China. PPI is the purchasing price index as well. So we got it's the change of goods purchased and sold by producers. So it's the people that make the stuff. And that was a little bit of a gain, but at the same time, it shows because it's negative. We are in this kind of deflationary environment, certainly in China. Great, John. Okay, well let's get to gold in a moment. I mean, this is the first thing. That gold can be used as a hedge. Now, if we're thinking about the seasonals with gold, sorry, that camera's not the best angle there. If we're thinking about the seasonals with gold, then the seasonals do suggest that we are about to get some upside in gold, and that's something that you can trade. My issue is on the broader view, and my broader view of gold actually is that it doesn't seem like a decent investment class for a long-term move at this particular time. It doesn't mean I want to sell it because the seasonals might play out. If we come to gold and see what the price action's suggesting, then there is a level of resistance here. Now, if we just flip to the weekly chart here. Actually, let's flip to the daily. It might be a little bit cleaner on the daily, and we'll flip back to the weekly. But if you can see here, there is a level of resistance here on the weeklies, which is already telling us that this particular price point is a sell zone. But I don't really want to sell it, even though there may be an argument to suggest that gold is going to drop a bit instead of go to the upside, but the seasonals are really strong at this time of year, and I think it would be a dangerous play to be on the other side. But what it is telling me at this particular time, or what I'm getting from the information is, I either don't get in because the price may well come down a bit further, or I get in if the price comes down a bit further. So I can't justify it. I can't justify it purely on the seasonals because I'm looking at some of the other driving factors that make this up. And they are suggesting to me that maybe that there's not the rally coming with gold. Let's get to that a little bit. So from the US session on Monday, it hasn't really, John. You're right. You're right. I mean, it's kind of gone a little bit higher than the. I mean, let's think about it in percentage terms. The monthly pivot is obviously a really strong level. Now we're talking about, it's Wednesday today, so this was a decent bar to the upside on that Monday, and it's a buying bar. It's an engulfing bar and it is a buying bar. The problem is where it sits, and this is why we can't get caught in just looking for bars and saying it's a high test bar, low test bar, engulfing bar. Let's enter. These things have to exist in the right places, and to my mind, this doesn't quite exist in the correct place here for a trade to the upside, because it's trading right into resistance. I mean, there was every chance that resistance would be seen yesterday, but now it is just easing off a little bit. Now, as I say, I could be silly not to get into gold, because there's obviously some support with the seasonals, and I have to hold my hands up. However, what I will say is that if I don't get in at all at these levels, then I can't really commit any kind of felony. It's more that okay, I'll be giving up profit, but I'll look for it in another area. I would want it in my portfolio to kind of protect the upside. But I will. There are other instruments that I can use. So I've got the crypto space that is playing out now. That does seem to be kind of risk off, so maybe it's not the best, but it is there. So if there are any other things that come around, then maybe the crypto space does protect me, and I don't need to worry too much about the gold thing. But let's have a quick look. So this is my case. Now, I would encourage you all, if you are. Oh, I'll show you the seasonals now, Steffi. I'd encourage you all to sorry, my camera's flashing there. To make both cases. When you are looking to buy or sell something, I'd encourage you all to make a case for the sell side as well as the upside. And we're also going to get to the dollar as well, Steffi. Because I'm with you on the dollar. I'm 100% with you on the dollar, in as much that I think there will be a bounce. I don't know what the catalyst is, but I do think that there's going to be a bounce for the dollar, and I'll tell you what I'm going to look for with the dollar, because I am looking to buy the dollar. I think it's a bit more attractive than some other things. So let's have a look. Now, the seasonal movement is in the same way that if you were trading a holiday stock, let's say you were trading an airline stock. An airline stock will have a seasonal movement during the summer, because more people will be utilizing air travel during the summer months. Hotels are much more likely to turn a bigger profit in a country like the UK in the summer than they are in the winter, which means that when people kind of shift their parameters, they may well trade like purely seasonally. That because what we're always looking for with stocks, which we are going to get to, is the profits they make, because it's the profits they make that pay the dividends. Now, if you want to hold a stock in a hotel company for 3 months of the year, 3 to 6 months, let's say, you're much better off buying it in the UK. I'm talking about. You're much better off buying in May and selling in, the end of September, to sort of like capture the holiday season, rather than buying in December or January, probably more pertinently, and then selling at the end of April, because they won't necessarily turn the profit then, and they pay their profits. Most companies will pay their profits every quarter, so the profits will be a lot less during that quarter than they would be during the summer months. So that is an example of a seasonal pattern. The seasons affect the movement in a specific stock, and the seasons affect the movement in commodities. They affect it in man-made synthetic products like currencies, and they affect metals as well. So with gold as a precious metal, the seasonal pattern with gold tends to rally very, very significantly during August and during December. Now, some of the reasons that we know that gold does rally is that there is a big celebration period during this time, similar to what I was just talking about with the hotels. Big celebration period during this time, so more gold is kind of sold at that time, so the supply picks up, and because the supply picks up, then it suggests that the demand isn't always able to completely fill supply. So we do get this rally in prices with gold. There's a kind of a big gold boost. Now, one of the issues is, and what Geoff said, I think last week was so pertinent, and I make him right on as well. He was talking about the fact that maybe gold won't get that supply story this year because those parties and those celebrations are less likely to happen depending on lockdown in specific countries. Now, India is a big buyer of gold during this period, and we know about the pandemic, right now. Now, this is what tends to happen. So, year on year, on average, from 1975 to 2019, the blue line shows us what's happened on average to the price of gold. The weighted average is just a bit more weighted on the most recent data, and we could go back and have a look at what's happened in the last, during December over the last few years, and it does rally, and it rallies pretty significantly as well. So you could definitely make a strong case to say on seasonals alone, gold is going to rally at this particular time. The issue is what drives those seasonals may not be there this year, and I've got a bit of an issue with that. So now let's get to something else that I think is pertinent with gold as well and quite important. I just tried to buy it again at 1850, but got to 1852, and I didn't get triggered. Hey SF, how you doing? Dennis, you may well get back in. You may well get the opportunity again. What's it at 90? So you're looking at 1850. Yeah, I think you'll probably get the opportunity again. I think gold. This is a pretty strong level of support here, isn't it? So this is the balance. When we are yeah. I'm just talking about that now, Fad. I mean, that's my particular opinion, and it's I don't have as much experience with gold as I would say the FTSE 100. I mean, the FTSE 100 is my bread and butter, and indices are my bread and butter. So when it comes down to gold, I have to kind of gather information more from what I'm reading and what I'm reading from COT data and seasonality, rather than from experience. So with the FTSE, it's that, but it's also, I'm really experienced trading the FTSE. That's the thing I've been trading for the longest amount of time. The UK indices and the UK stocks. So with gold, it's more about what does the data and the information tell me. So I'm not as equipped as somebody like Ainsley, for example, who's really experienced with gold. So I wouldn't take too much. I wouldn't take too much heed in my particular thesis. I can only just express to you how I think about gold and the reason I won't be getting in at this particular stage. And the reason I won't be getting in is really what you're asking about the fact, will gold sell off? My particular opinion is yes, it will. Which means that I can't get in yet. I want gold. I do want gold, and I want silver in the portfolio. But I think it will sell off, and I'll make the case to you, and you can make your own choice about whether you agree or disagree. But don't take my word for it too heavily, because it doesn't come from a level of deep experience. It just comes from a level of me looking around thinking, I can't justify it. That's what I'm saying to myself right now. I just can't justify buying into gold. Now, I wouldn't sell it because the seasonal indicators are so strong, and I didn't really want to go into this in too much detail, but I will very quickly. I'll just scan it back. Let's have a look. I was going to put the lines in, but I'm not going to. Let's have a quick look. So if we look at the seasonal we've just seen is December. Okay, now I'm going to bring this to a clean chart because we don't need the pivots, and they'll get in our way when we're looking. So December, let's go back to December 2019. Here, December 2019. Look at the rally that happens, a huge rally, and it bottoms out here in December. I'm just going to delete and make that chart a little bit smaller. It bottoms out, in fact, bottoms out eventually in March. But look at the rally from December right the way up until middle of February. Let's go back to 2018. This is December 2018 now here. Big rally again to the upside, December 2018. Let's go back to 2017. December, big rally. I mean, one of the bigger rallies in December 2017, December 2016. Now, all this stuff is important. This is 2016. Massive rally to the upside again. You know, look at that, the initial move to the upside. I'll do one more just because I think it's illustrating my point. But you could literally go back all the years and see again. Look at this. December was the bottom in 2015, and it just rallies again. So the seasonal tis the yeah, maybe so, Shukri. I can't justify, and I'm gonna tell you why. So the reason I can't get into gold, the reason I'm just not buying into it is that your point, Shukri, about the season to be buying even jewelry, I think that's going to get affected. I think Geoff's point is the thing that's really bored in my head. Geoff's point about, is it going to be the season this year for them to be buying gold? It might well be that this is a self-fulfilling prophecy and we go up anyway. But I can't discard what I now believe to be the potential case. And what I believe to be the potential case is that they may well not have the buying with the same pressure that we've had over recent years. You know, now this is the last 5 years, but when we looked at this on the seasonal chart here, this is over the course of the last 45 years. So we know that the bias is over 45 years, it's to the upside. If you buy in December, you've got a high probability of making money. High probability. Okay. Sorry, Shukri's just telling us, Larry thinks there's going to be a pullback. Oh, there you go. Forming inverted head and shoulders around 1800. Okay. Well, I mean, there is evidence of that as well. So if we look at this chart again, and sorry to be flipping around, but there really is a few bits of information. So 1800, now we're at 1860. 1800 gets us down to here. That's Larry Williams's his particular thesis there, and that would create an inverted head and shoulders. I'm not sure on what chart, on what time frame. What I saw with an inverted head and shoulders was this. Oh, unless Larry Williams might be talking about the same thing as me. Comes in quite deep. Yeah, when I looked at this, I did see the potential for an inverted head and shoulders, and it did suggest to me that maybe the timing was off as well. But what I saw was a left shoulder there, the head there, and that would leave, you know, a right shoulder somewhere in this area. For it to come down that much, it could still be like that. So you get a left shoulder, a right shoulder, and a kind of a head like that, which, you know, that's part of the head there. So it could be more like that, and then we start to take off. I'd want more reason to buy on it than just the inverted. Sorry, just the seasonal pattern. So let me just tell you a few other bits and pieces here. I've got to make sure I've got the right account here. Here we go. Right, now, gold and silver are very closely correlated. Now, if you have a look on this website, it's called the Silver Institute. The global, it's called the Silver Institute, yeah. silverinstitute.org. Now, looking at this, and if we look at what I want is news and events, or is it news and events? News events press release. And what I want is, here we go. Here we go. Yeah, this is the one. Silver's use in jewelry is an important demand source for the precious metal. And that still goes with gold. Same thing, right? Because silver actually is a lot more useful than gold. Gold has got no use whatsoever apart from it being a precious metal that people seem to want. In 2019, 200.2 million ounces of silver were consumed in this sector, which was just shy of a record high of 201.9 something ounces, million, I guess, posted in 2018. Although silver jewelry consumption currently accounts for 20% of the total silver demand, so big, the jewelry aspect of it, there's a big silver demand. It's projected to rise at quarter of global silver demand by the mid-2020s, further underscoring the popularity and the desirability of silver jewelry among leading design and fashion conscious consumers. Now, if we go down a little bit, the report states that the global silver jewelry market has been negatively affected in 2020 by the COVID-19 pandemic. Higher silver prices in the US dollar terms, and record local silver prices, especially in India, the world's largest silver fabricator, while global silver demand is projected to fall. Now, this is the really important one, by 23% in 2020. Silver jewelry demand is expected to bounce back in 2021 and is likely to see a 13% recovery despite anticipated higher silver prices, primarily due to the forecast in economic recovery. So it looks like we're going to get a bounce, but I mean, that cited the fact that we had the pandemic as no, it didn't. It didn't read it there. But if you read on, oh yes, it is. Sorry. Yeah, the report states that the global silver jewelry market has been negatively affected in 2020 by COVID-19 pandemic. Now the COVID-19 pandemic is still happening. Larry thinks there's going to be a pullback forming in inverted heaven. Shows data from the USA shows that that debt was paid down. Okay, cool. All right, that's interesting. All right, we can look at that in a minute. Actually, Sugar was just telling us about a stock, which we'll look at in a few minutes. So that doesn't build to me. That doesn't say to me that that the seasonals are going to be quite as strong this year. So that's my first issue with gold. And all I'm doing is building the case on the other side of the argument, because if I get into a trade without knowing the other side of the argument, then I don't have the ability to make a completely informed decision and then know what it is that I need to. Gold is very important if you're a rapper. How are you going to get your big gold grill teeth without it? Yeah, you're absolutely right. And what I want to know with that is rap music booming right now, or is it starting to fade off a little bit? I think it's fading a little bit, isn't it, Dennis? So that means that there's even less gold demand. I think it's all about grime in the UK now, which is kind of a derivative, I suppose. But you know, so I'm trying to put together a picture to give me the other side of the argument. Now, that side of the argument is perplexing and it's a little bit concerning for me at this particular price. Now, it doesn't mean I sell it off, because the seasonals, as I say, are very, very strong. And when you see such a strong seasonal bias in the foundation, then it's going to make it a very, very tricky sell. So that's the first thing. Now, the second thing is, there's three things in total. The second thing is the COT data. Now, if I look at the COT data with gold, I don't have really huge, like look at the COT data here and how it indicates a big rally to the upside. So when there is a lot of buying here, within a few weeks' time, it's a weekly chart. Within a few weeks' time, the market does start to rally. Same sort of thing here. It's not that high. Yeah, actually, it's just under the 80% line there. But look, another big rally to the upside, a decent rally to the upside. I don't see it here. If anything, this is flicking slightly to the downside. So the commercials aren't that interested. Now, it doesn't mean just because the commercials are in this area that gold won't rally. So there is a caveat there, but it does mean that I haven't got the biggest players on my side if I'm buying gold and looking for a big rally. If I look at it here, well, let's look at December 2019. This is the last one. This is the last rally we had in December 2019, and there was big buying going on. Just prior to the big rally, there was a big bias to the upside. This is December 2018. Not particularly bullish, in fact, it's quite low, but it did start to go further higher, and then we saw the rally come in. um, Dennis is saying they're using paper mache now, which they probably can only afford at this particular stage. 2017, it was above 50, and I'm reading it from this point here. When it's above 50, that means that there is, slightly more weighted to the upside than the downside. When it hits 100, it's, there's a heavy weighting. But look at it down here, 22. So if we think about this in percentage terms, then which is kind of not, because it never goes above 100, but it stays within this range. It's like an index. So the index is saying that that there isn't a great deal of buying. So the bearish case for me, or the case to buy gold, is disappearing. I've got a report about silver consumption, which I know isn't gold, but it does relate to precious metal. So I've got a report from the silver consumption, which is suggesting that there is a lack of demand because of the pandemic. I've got the commercials that aren't telling me just go ahead and buy it, but I've got the seasonals on the other side. Now you have to weigh that up as an equation. Do you still trust the seasonals, or do you say, and this is a genuine question, so do you trust the seasonals, or do you say, actually, I don't have enough else in my favor to say that this year the seasonals are going to play out? And I've asked myself that question, and I've said to myself, I don't have enough information to say the seasonals are going to play out. Now I might be wrong, but I'm happy to be wrong, because if I stay with this kind of information and continue to kind of make the case on the other side, I can't lose money. Okay, I won't make it, but I can't lose money doing it this way. And really, my whole thing is about defense first. Now, there's one last piece of information. And the last piece of information is about the dollar. Now, the dollar has got, the seasonals in the dollar are traditionally at this time of year, again, absolutely atrocious, which means the dollar comes down. Most other asset classes against the dollar will go up, and gold is one of them. So this suggests some weakness in the dollar coming into January, which might still happen. But then what happens in January? Now, what might happen with gold is that we see a rally, but it's just not as extended. So you might be trading gold to the upside quite happily, but it might not be such a solid rally to the upside. So you're going to need to look at that. Look at the COT data with the dollar. Now this illustrates where they will be wrong they can be wrong for a long time. They don't generally get it wrong like this. You look here, the last time they were at 100%, the market still fell for quite some time, but they remain buyers, and then eventually the market does eventually play out. And if anybody that would have got in long at this particular point by the end of it, they're covered. But they're long from here. They're long from here. They continue long. They're buying. They're probably dollar cost averaging down. Remember, these guys are the people that are in the production cycle, if you like. When it comes down to these guys, these are people like hedge funds that would own shares in another country. So even though they are selling dollars here, their shares in other countries, or their shares maybe in the US, are protected, because they would still be going up while the dollar comes down, and they just buy some more dollars as well. And so they're always hedging their position. So they're their hedges. So they never really lose out. But eventually the market turns around. Now, it took a long time. It took a long time to turn around and go to the upside. Something similar looks like it might be happening here. We've got a long dollar here. We continue long here. Yes, they've got a little bit of upside here, and they chose to sell a little bit off the commercials. This is, but they haven't reduced their positions so significantly to lead us down again. They're not reducing their positions here. If anything, they're starting to extend them again. Now I've got an area that I'm gonna look for with the dollar. It's probably not too far away from here actually, but we'll have to talk about that in the US Open because we're a bit out of time. Let's pack it up here and we'll go over to the US session. I apologize for everybody in the YouTube room, but if you have liked the show, please hit like. I just wanted to make sure that that we got some, you guys got some of the information, certainly about gold. I've made the point about gold with enough detail. I'm going to go into a little bit more in the US show, but you've pretty much got the crux of it for you YouTubers, which I always appreciate you guys being in the room, but we do have a time constraint, so we've got to move on to the YouTube channel now. Sorry, to the Zoom channel now, and continue the discussion. But yeah, fully appreciate you guys coming in. Thanks so much, and thanks for posting as well, Dennis. I always love your posts, and I'll see you guys on Monday. We're getting close to the end of the year, but I'll see you guys on Monday.